Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. The International Monetary Fund sees the Philippine economy bouncing back slightly faster than expected this year. The IMF says it expects the country to grow by 6.9% this year. That's faster than the 6.6% estimate it gave in January. But the IMF emphasized the importance to containing the surge in COVID-19 cases to achieve a strong economic recovery. IMF representative to the Philippines, Yang cautioned the tighter quarantine measures and the recent spike in infections are significant risks to their rosy outlook. Yang also tagged a slower than expected vaccination rollout, persisting geopolitical and trade tensions, as well as potential volatility in the global financial markets as factors that could dim the country's growth outlook. With no end in sight for the pandemic, the IMF says vital assistance and reform measures will be beneficial for both households and businesses. Meanwhile, the multilateral lender also revised its growth forecast for the global economy to 6% from 5.5% in January. It cited upside risks from additional fiscal support in some large economies and a vaccine-powered recovery by the second half of the year. But despite the rosier outlook, the IMF stressed that different economies are seeing divergent paths to recovery, with emerging markets facing persistent economic damage from this crisis. Okay, guys, opening trade this Wednesday morning on the back foot, at least for our domestic markets. Our index here at 6583.06 in the first 1 minute of trade. This is also echoing some of these sentiments that investors are saying right now, saying that they are seeing this route, what they call it a stock route, deepening on the stringent virus curves that we are now experiencing. Just to highlight the fact that we are right now the worst performer in the Asia Pacific region, and they're looking at this performance to get even worse. So far, we're down by 7.7% year to date. Now, this according to Gerard Abad, CIO of AB Capital. There's more downside risk at this point in time. He has since actually doubled his cash holdings since the start of the year, and he expects our index to be hitting 6,000 if the virus curves continue to fail. Now, our equities are the weakest correlation to our Asian peers since 2017. This might be a sign that the Philippines will be lagging our neighbors in economic recovery. Now, just a quick peek at our sectors here. You can see only a couple in the green. Properties up by 0.2%, financials as well. But the worst hit this morning are the holding firms. That's down by 0.4%. Now, let's take a quick peek at financials. Financials happen to be bearing the brunt here year to date. That's down by 4.4%. Let's take a look at how they're performing today. A little bit on the green, with PNB leading the charge up by 1.3%. This as the BSP has reported that the bank loans to the small or the medium-sized companies have slumped 17% in 2020. That's just a little over 480 billion pesos. This is only equivalent to 5.71% compliance ratio. The required ratio to be loaning for banks to these MSMEs is actually at 10% of the threshold. This is mandated by the government for the Magna Carta for MSMEs. Of course, MSMEs play such an important role in the economy. They contribute 35.7% of the value added for the economy. And in terms of numbers of companies, it's 99.5% of the total establishments, employing 63% of the labor force. So not enough loans going to these small establishments. I just want to take a quick peek at our leaders and laggards this morning who is pulling our index down. You can see Emperador, the worst performer this morning, down by 1.3%. But as I mentioned, a mixed picture here with Ayala Corp in the red. But you've also got on the upside, Metro Pacific up by 1.5% together with PLDT, which was one of the worst performers during the recovery, our favorite, so to speak, lockdown stock of a lot of analysts. Meanwhile, let's take a quick peek at Jollibee. This is one that is still having some bright and optimistic outlook, at least in Europe, despite the pandemic. They're eyeing to open 50 outlets in Europe over the next 5 years, they will be spending 50 million pounds to grow their reach in Europe. They target to open 8 outlets this year. That's going to be a flagship in Leicester Square in London, followed by outlets in Edinburgh, in Scotland, Cardiff, Wales, and even in Madrid, Spain. So right now they're saying that locals are accounting for 70% of the customers in the UK, but they're looking to expand that reach. So not just Filipinos eating Jollibee, but just the general public. They have sold over, get this, 5 million pieces of Chicken Joy across Europe since it was first served in the region. Global equities are raging in anticipation of a broader recovery, but it seems we may be sitting out this euphoria for some time. Now, here to chat with us about the recovery risks, we have with us Michael Langham. He's the Senior Asia Country Risk Analyst at Fitch Solutions. Good morning, Michael, and welcome to the broadcast.
Hi, and thanks for having me on.
Michael, let's kick off with what's going on and your revised outlook for the Philippines. You've got surges in terms of the COVID-19 cases happening over the world. So we're not alone, and this is what the government has said. It's not just the Philippines experiencing this. Lockdowns were highly anticipated, if at all. There's also been vaccine deployment issues, not just in the Philippines, but across the world. So why do you think that the Philippines is still generally worse off compared to other countries?
I think it's the way the Philippine economy is structured, right? So when you compare it to, say, what's happening in Europe at the moment, which is also seeing a surge in cases and lockdowns there, those economies, particularly, say, Germany or some of the emerging markets in Central Eastern Europe, are a lot more tilted towards exports. The Philippines is so dependent on domestic activity to drive growth. The minute you start to impose lockdowns, that really weighs on headline growth. So just to give you a stat on that, domestic investment and consumption together account for over 100% of GDP. So really, any disruptions to those really weigh on growth in the Philippines, and more so than some of the other economies experiencing lockdown measures.
That's a very interesting point that you make here, because we have reported that even when you look at the equity markets, they've been rallying as of late, saying that investors are saying it's a sweet spot. Interest rates are very low, and then the recovery is underway, especially in the developed economies. Do you feel that we're not going to be benefiting in any way, or at least we'll be benefiting in a very limited capacity when the rest of the developed countries do recover?
Yeah, I think that's a fair point. Like I mentioned, exports aren't as big a driver of the Philippine economy. What we've seen are supply constraints. So in terms of the export sector rebounding, there's been, issues around that. And then you add in that the global recovery actually is pushing up commodity prices, and that's feeding through to the inflationary pressures that we're seeing in the country. So from that perspective, while an improvement in external demand definitely is a good thing, and that will help the export sector pick up, there are some negative feedbacks as well from the high commodity prices and just supply chain issues as well.
Michael, what about our dependency, for example, on offshoring, like BPOs, remittances, for example? We are still, highly dependent on these. Are these not some bright spots that you see?
Yeah. So remittance flows, that's definitely something where, and that's why we are forecasting quite a strong, a relatively strong growth outlook for the Philippines. I know we've revised our forecast down, but we do still see consumption and private investment rebounding this year. And one of those factors driving that will be a pickup in remittance flows and generally an improvement in investor sentiment around the world. Now, I know that the Philippine stocks are lagging, and there is generally a bit of uncertainty around the lockdowns, and that is why we've revised down our growth outlook. But these factors, the remittance flow pickup, the general improvement in investor sentiment as the global economy gradually recovers, I think that will provide some upside as well. And that's what we factored into both our consumption outlook for the Philippines as well as the investment outlook. Now, if the global economy was to struggle to pull out of this new wave of COVID cases that's sweeping the world, then that too would dim the outlook for the economy.
Michael, can you just nuance this 5.8% revised outlook that you have for the Philippines? So it's significantly lower than what the government is still saying they're expecting. And we even had, just reported the IMF saying that they're even upgrading the outlook to 6.9%. Does this factor in the slow vaccination rollouts, more targeted lockdowns in the country, or is this a base scenario wherein we're actually going to be able to get underway and this is the best case scenario, or are there still some upside risks you see here?
Yeah, I think this is taking what we've seen so far this year in terms of the ability to control the COVID outbreak, the vaccine rollout pace as well, taking those factors on board and expecting a similar situation through the year. We do expect vaccinations to pick up, but generally to lag what we've seen in other markets. And I think when you compare Philippines to some of its regional peers, particularly say Thailand, for example, the ability in Thailand to avoid going into severe lockdowns repeatedly has meant that its economy has fared slightly better in some ways or avoided as sharp a decline. So that's partly why we are a bit more bearish than the IMF, for example. I think they've even sort of highlighted that the recent lockdowns could pose downside risk to the growth outlook. And unfortunately, because cases are so high, we don't see these lockdown measures being eased in a significant way to restart the economic rebound in the near term.
Okay, and finally, Michael, what's your take on the fiscal discipline, so to speak, that the Philippines, or at least the finance ministers, are doing, not releasing more stimulus despite repeated calls that we are lagging behind our Asian peers when it comes to providing stimulus, especially for the small and medium-sized enterprises?
Yeah, at Fitch Solutions, one of the themes we've been talking about are policy constraints for emerging markets. They don't have the benefit of developed markets in being able to tap bond markets for such low yields. Where we think the Philippines does have some room to maneuver is on being able to keep its policy rate on hold for a bit through this year. We've seen other emerging markets having to tighten monetary policy because inflation's a bit elevated. We think the Philippines can avoid that because of the loan growth situation. Until loan growth really picks up, I think there's an understanding from markets that monetary policy is going to have to remain accommodative. And then on the fiscal side, I think it's an interesting approach from the finance ministry. From their perspective, that they're saving some scope for fiscal stimulus for when the economy is fully reopened and when they believe that it can be most effective. I think that approach may actually, when we see in 2022, 2023, that could actually see the Philippine economy begin to outperform again. So there may be some near-term pain from that approach, but medium-term gain.
Very interesting. So they're betting on this longer term sustainable approach there. Thank you so much for those insights. That was Michael Langham, Senior Asia Country Risk Analyst at Fitch Solutions. Okay, here are the other headlines we're keeping our eyes on. The Bureau of Internal Revenue says they will not extend the April 15 deadline for filing and payment of annual income tax returns. However, the BIR will allow the filing of a tentative ITR before the deadline and give taxpayers until May 15th to amend the returns without penalties. The Bureau added that if overpayment will be made on the revised ITRs, taxpayers can either file for a refund or choose to carry over the overpaid tax as a credit against the tax due in the following period. The BIR is also allowing taxpayers to file returns and make payments even outside the area covered by their RDOs without incurring penalties. House Speaker Lord Alan Velasco says the lower chamber is ready to hold a special session for the immediate approval of the 42 billion peso Bayanihan 3 package. That is, if President Duterte will certify the proposal as urgent. This comes after Senate Minority Leader Frank Drilon urged the president to call for a special session to pass the bill and expand the government's cash subsidy program. Now, as of the moment, the third stimulus package is pending in both houses of Congress, while legislators are currently on break until May 17th. Drilon explained that the government must prepare to assist millions of Filipino families that are going hungry this year due to lockdowns. However, Senator Ping Lacson cited the Budget Department who already admitted that there are no more available funds for the said program. For Lacson, the country's best option is to allow for more private sector participation and vaccine program flexibility. And that's a first look into the business day. Today is Wednesday, April 7, 2021. Catch Businessworld Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.